So welcome to live trading session today, traders. Today's video is all about every Wednesday we stream to you live, and all that it's all about is trading live on the market, showing you all the live trades that we took, how do we take it, the rationale behind it, so that you guys can learn as well on how you can take some really good, great opportunity setups for intermediate traders, and what you can also include into your strategies so as to improve the performance. Or for those of you beginning off, you can just get inspired by this and start your journey towards there as well. So there's two things you can do from here. You can start your journey by looking at our 5-part video series, Trader Starter Pack, or you can also look at our live trading room video series as well for the intermediates, and then take your next steps forward from there, and also use some of the platforms that we are using as well. Okay, great. So let me just go on to here for a moment. You can see my screen all right. So that's the dollar yen over here. And what you can see over here is basically us taking a trade over here at earlier on today at 12:02 at 11:40. We got in at this price over here 103.62, and then we exited out for £1,058, so on and so forth. Now, what did we do actually over there? I mean, what was the thinking behind it? All right. So let's take a look at what we were actually doing over there. Let me just quickly just stop this share over here. So great. So that's, and then let me just change the screen a bit, and then you guys can take a good look at it. All right. So there we go. Right. Let me just go on to a daily chart. So yes, the last video that we looked at basically, we looked at ranges, isn't it, traders? Yeah, we looked at ranges. And in this video, I'm just going to correlate onto another topic, another part that you should know for intraday trading or for any end of day trading as well. You should be understanding this word, what we call the stretch. Okay, the stretch. This was very popularized by a billionaire hedge fund trader today by Toby Crable back in the 1970s and 1980s. Until today, this principle is still very important and very cross-transferable to any strategy that you may be looking to do. So let's take a look at this. All right, what does it mean? You see, every bar that you see, let's just say for a daily time frame, what we are looking at here, right? For daily time frame, every bar that you see has got a high and a low, and in between, it's got a open and a close. Now, what we are really looking for is just let's include just the open. What we mean is that when we have an open, a horizontal line like this, now if you see the high and the low of the bar is segregated into two portions at the moment, all right? Now, what are the two portions? You see, there's one part which is the nearest to the open, the nearest extreme to the open. That's called the stretch, or you can also call it the smaller range from the open, okay? So the nearest extreme to the open. Of course, then the other part of it will be the bigger range from the open, as one of our elite traders called it. He called it bro, you know. That was Keith actually to call that. So that is what we call the bigger range from the open. The opposite side will be the smaller range from the open. Right. The smaller range from the open is what we call the stretch. Now, every day before you want to do intraday trading, or you want to take a look for end of day trading, if you have a chart like this, and you can see over here what I've done over here is that this blue line here that it draws out is an automatic indicator. It's a open line. Okay, this is where it opened. Okay, so it takes on from yesterday's close, and then you can see a green line and a red line on top and below. So this is what we call the equidistant lines, right? They're equidistant. And what does that represent? It represents the average stretch distance over the last 10 days. So what is it actually doing? So if you take a look and remember what I said, the smaller range from the open is the stretch. So let's take a look now. Let's do this together. So if you can look at, actually, let's start from yesterday, right? Easier is better. So if you take a look at this red bar here, if you take a look, so if I were to draw that and the open was here, now you guys tell me, where is the smaller range from the open? Is it to the upside or is it to the downside? What is it? Okay, some of you may be already thinking about it, some of you are already typing into the chat box. Whatever it may be, most of you probably would have got it, is that the nearest extreme to the open or the smaller range from the open is to the upside, isn't it? And then if I were to measure that, so if I take from the open to the high, that's 6 pips, isn't it? And then over here, the open to the high, that's 15, and then let's see, open to the low, that's 11. So you can see for this day it was 6, for this day it was 11, and then here, let's see, so it's a little bit, isn't it? Here, look, that's probably about 2, let's say. So we add up, keep adding up like that, 2 plus 11 plus 6 and all that until the 10th day, right? And then we divide it by 10. Okay, and it keeps doing that every single day. So for today, you will calculate the stretch again. Look at the stretch, it's so tiny, like about 1 pip or 2 pips, isn't it? So that's what it will keep doing again and again and again and again. And that's what then you have it drawn automatically for you. And that's the stretch line on either side. Okay, so when I take a look over here, you can see this is 8 pips, isn't it? And this one also is 8 pips. That's the stretch for the last 10 days, the average stretch. And then you can see that after it opened, it only did a small stretch here and it took out this green line. At the point when it takes out the green line is your first sign that, hey, it's going past the stretch line. Therefore, the opposite side might be the stretch for today. Remember, this is a 1 hour time frame. So what we are doing is we're getting the stretch from the daily time frame. So the stretch, let's say, is 8 pips, right? From the daily bars. Remember, I said nearest extreme to the open on the daily time frame. And then on the 1 hour, we are looking to see, okay, how is this bar going to form today as the stretch been formed to the bottom? That means the BRO is to the opposite side. Now, if you want to do your homework, which is take a look at my previous video, which was on the range. Now I'm telling you the stretch. So I'm putting all the pieces of the jigsaw piece puzzle together. So if you know that the stretch has been formed to high probability to the downside, and then you know that, hey, hang on a minute, the BRO is to form to the upside today, then all you have to do, and if you know your range, and if your range is, let's say, 70 pips, all you got to do is minus away the stretch, which is over here, minus the 10, and the remaining then will be 60, and that's what you'll be trading as an intraday trader. So that's the thing. Every day, when you start intraday trading, if you want to do that, then you always ask yourself, where is the BRO going to form for today? That's what you always got to be asking yourself. And then even if you do not want to do intraday trading, most of our traders in our live trading room do end of day trading, which is just 15 minutes. You don't need to sit in front of the screen, but all the risk management has happened. So then you can still use these stretch principles and all that, and it's very cross transferable. Okay, right. So I guess that's pretty much that for today. So the stretch, what did we learn so far? So the stretch, if you got the high and the low of a bar, then look at the open, and then the nearest extreme to the open is the stretch. We correlate that onto an intraday time frame. And over there, and then what we then look at is that as the stretch being formed to the downside, and then we take and trade the bigger range from open to the other side. So in terms of this, how did we actually trade for today? We took it as it broke up from the high of yesterday, and then we took that towards confirmation and towards where previous stops were. So we will start to slowly feed in this information to you so that you all can piece it together and also use it in your own trading as well. And as I mentioned before, two things you can do from here, traders. One is that you can basically for beginners, especially if you're inspired by this and how you can make a supplementary income as well. One thing that you can do is start looking at our Trader Starter Pack video series. Another thing for the intermediate traders, you can start looking at a live trading room video series as well, and start trading on your platforms to make the best out of these opportunities. We are more than here to happy to serve you, to help you succeed in your trading endeavors, and also to look to see how we can make a passive cash flow with breaking the time money link to free your time and to do the things that you always love to do. All right, so I guess that's pretty much that from me on this video. Do reflect on it, do digest this, integrate this into your own trading, or for those of you starting off, go ahead and start off your trading journey. We're here to serve you. That's all from me for now on this video, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.